Give me just a quick second. Uh-oh. One more thing, and I will be ready. All right. Okay, here we go. Yes, my name is Pat Spence, and I'm with One Source Financial Solutions. Last week I introduced our business as One Source. Let me do this a different way. My apologies. Let me stop this. Okay. And let me start over. Okay, there we go. Child, this technology stuff can be something. And you got to be on your P's and Q's with all of this. Yes. Okay, there we go. All righty. Okay, I think we're ready and as they say, cooking with some grease. Again, good morning, everyone. Good afternoon. My name is Pat Spence, and I'm the owner of One Source Financial Solutions. And our objective is, our purpose is, and our motto is to help small businesses with their back-end maintenance. Back-end maintenance, including the tax preparation, tax planning, tax strategies, and some bookkeeping. A lot of businesses, we want to make sure that they can focus on their core objective of their business, which is setting up profits, leads, and things like that that can grow their business monetarily. A lot of businesses, they do focus quite a bit on those type of things, and so therefore sometimes their back office goes not unnoticed, but it doesn't get the attention that it needs. And these are the things that are very well needed come time for tax season. And so today is December 18th, and we are approximately 13 days away from the first of the year. And the first of the year will start the 2023, it's 2024 tax season, but we'll be filing 2023 taxes. And so one thing I do want to go back on, last week I forego talking about the Schedule Cs to try to get the word out about the BOIs that's going to become effective on the first of the year. And that BOI is the Beneficial Ownership Information Forms. And they're going to require all LLCs, limited liability partnerships, and all businesses are going to be required to fill out that BOI. That BOI is a part of the Corporate Transparency Act. That BOI will be submitted to FinCEN. Last week, I wanted to make sure that you guys get the correct name of FinCEN, which is going to be the reporting agency that the BOIs will be monitored, managed, and maintained by. That is the Financial Crimes Enforcement Network. And that portion or that arm of the government, they monitor all businesses that produce some sort of income. The businesses that are hiding themselves behind LLCs are actually making it bad for everyone because there's money laundering going on and all types of things where people are cheating, reporting income. So the main objective of this BOI is to make sure that they find out and know who all is behind the LLCs. That information will not be public information. So just be okay with filling that document out. The absence of not filling out that document will cause you a $500 a day penalty, up to $10,000, and it's either and or 2 years in prison. So if your business was established before your LLC, sole proprietors, to my knowledge, at this point, are not subjected to this form. So if you formed an LLC, hold on just a sec, I forgot to turn the recording. If your business has been formed prior to 1 January of 2024, then you will have 1 year to get that BOI filed. You can either file it yourself or do a third party to do it for you. We do and have partners that do that work. They will file the BOI for you. So if you are in need of getting that done, please reach out to us and we'll make sure that it's taken care of. If you file an LLC after January 1st of 2024, then you will have 30 to 90 days. I think they did change the criteria from 30 to 90 days to get that filed. So again, be mindful of that penalty and just go ahead and fill that document out. Get with your tax preparer or, get someone to fill that document out. This is also too, just flipping going to the other side, another way for someone to make some money, if you will. So be mindful of the people that will come to you and say, hey, I can do that for you. Make sure that their credentials are straight and make sure, because if they don't file it correctly and properly, then you don't know what problems or issues that it can cause you. Okay, so I just wanted to reiterate and then just kind of hash over the what we talked about last week. So again, we've got about let's see, today is the 18th. Oh no, what did I say? Let's see, 13 days. Yeah, okay, yeah, we've got 13 days to tax season. So what I wanted to talk about today is all the businesses are going to be required to file all their income, all the income that was made for the year. All businesses are going to be required to fill those documents out. And the document that they will be required to fill out, which is what we will go over, just a portion of it today, is a Schedule C. And the Schedule C is the reporting document or the document that you will use to report any profits or losses for your business. The uses of the Schedule C, again, is to all of your expenses that you put out for the year. That is how you will offset that income. So it is very imperative and very important that you do your due diligence in filling out that document. If you prepare your own taxes, fine. If you have a tax preparer, then that tax preparer should know, based on the type of business that you have, they should know what expenses and just help you maximize on all of your taxes or limit the amount of taxes that you pay. One thing that the IRS does is that they will tell you in the instructions and the tax code and everything that there is nothing against the law with you paying less taxes. You just need to make sure that those taxes that you do not pay, should I reverse that? That the taxes that you pay are the taxes that you are due to pay. So with your business, as a business, then you are taxed on the net of your business. So that means, say, for instance, if you gross, say, $1,000 and you spend $900 to get your business going, or you have $1,000 in income and you spent $900 to get everything going to get that business done, then you will only be taxed on $100. And reason being is that most businesses do not pay taxes through the year. They pay taxes at the end of the year. What some businesses do is they will set up to where they can pay taxes or set it off into a different account. As a business, when you set up your banking account, you should have a business account rather that is set up for putting monies aside that will pay your taxes if you owe at the end of the year. An account set up for taxes that's going to be utilized to pay those taxes. Okay, again, who uses a Schedule C? Schedule Cs are used for sole proprietors. They're used for limited liability companies. They're used for limited liability partnerships in some instances. Depending on the amount of income for the limited liability partnerships will determine if they need to show their entity as an S corp. And that's something that we'll go into later on down the line. Today, we are just going to be speaking about the schedule, about the LLCs and limited liability partners that gross a certain amount of income. And that could be anything up under, say, $40,000, okay? Some of the income documents that you'll need that will show if you'll need to fill out a Schedule C or not can be a 1099, a 1099 NEC, which is are the 1099s that are issued to them when a person or business is a independent contractor, if you will, to where they work on their own. An independent contractor is termed as an individual, again, who works on their own to where you don't have to, they dictate their own time, their own schedule, so on and so forth. No one is telling them what to do and how to run their business. A 1099K, a 1099K is the document that's issued to where when you use these third-party paying that they capture your payments. Say, for instance, like if you run your payment system through PayPal or maybe Venmo or Zelle or different companies like that, they will issue you a 1099 K at the end of the year showing how much money that was paid to you through or from different businesses. And some businesses will possibly pay you or issue you a 1099 miscellaneous. That document can be used, but what replaced the contractor portion a couple of years ago, I believe, is the 1099 NEC. But either way it goes, the 1099s, no taxes have been taken out of those documents. So therefore, you must file a 1099, a Schedule C. My apologies. You must file a Schedule C. Keep in mind that it's important. A lot of people want to try to evade paying taxes. For whatever reason, they might not intentionally do that, but they don't pay taxes. At some point in time, you will be found out. You have people, you don't know who's watching you. They pay for whistleblowers. They pay for people, pay people that if they see something that's not going right income-wise, you see this business drawing all kinds of money and so on and so forth, and it's people got wind or get wind that they're not paying their taxes, and they get reported to the IRS. The IRS will chunk that person some change to say, to let them know, because the IRS, any type of income that comes through, the IRS wants a portion of it. So the IRS, their portion is, as a business owner, their portion is off of the net, and that's after you have recouped all of your expenses. If you're still a W-2, then the IRS, of course, they're going to get theirs because it's up to the employer to take all of that tax off of the top. So a W-2 gets taxed off of the top. A 1099 or business, their money is taxed after you've recouped all of your expenses. Okay. Um, let's see here. Um, as far as expenses goes, you want to make sure that through the year that you have kept record of all of your expenses. That's based on whether you keep an Excel spreadsheet, whether you go through some sort of app that keeps track of everything. Um, that is that's a money sheet. That is a money sheet, because without that, let's just say you don't file your taxes, but you spent all of this money to get your business going. You never know, without filing your taxes, you could have gotten the majority of that money back. Your business may go into a loss. You'll have a profit, you'll have a loss. So if your business goes into a loss, then of course, then you would get a refund. So you just want to make sure you're in business to make money, and don't worry about how much taxes that you need to pay, to pay on that money. Just make sure that you do your due diligence in following the laws and following the processes and things like that, because you don't want to be in a position where you're constantly looking over your shoulders about, oh, I wonder if somebody's looking, or I wonder if somebody's going to find me out. You just always running your business with some sort of something, if you will. So, file your taxes and just make sure that that everything is done legit. Let me pull up the Schedule C so that you guys can kind of see what we have going. Give me just a second. Share my screen here. Where is it? See, let me go over here. Oops. Give it just a second. Let's see, screen share. I'm not doing this right. Hold on. And I'm supposed to be the techie in the family. Let's see here. I had it pulled up. Let's see here. Let's see here. I'll just pull up another form. Give me just a sec. Let me just pull up another form. Bear with me, guys. Yeah, we'll go to the irs.gov website and let's pull it up. Oops, not that one. Well, we'll do it this way here. Okay. Let's see. Hopefully you guys can see my screen. Uh, let's see here. Resume share. So, let's see. I'm going to assume that you guys can see my screen. Yeah, and I'll just use this one right here. This is the Schedule C. This is the 2023 version of it, and the Schedule C is termed profit and loss, and it does say sole proprietorship up underneath it, but just keep in mind that the limited liability companies, there are flow throughs. So once you're done with calculating, have all your expenses together, then it's going to flow through to your 1040. Your Schedule Cs will flow over to the 1040. The LLCs, they will also use this document here to record all of their income and expenses. So of course, the first line will be who you are as a proprietor, either your name, your business name, your social security, or your EIN. And it says sole proprietor because the sole proprietors, they use their actual social security number, okay? Your principal business or profession, and that is the type of business that you have. Most all of businesses can use this form as long as you're a sole proprietor and or an LLC. You'll also get your business code, and they'll have uh, the list to draw from to show your business code. If you do have a business name, this is where you will put your EIN number. If you have a business address, you will use your business address, and then the accounting method. The most common use is the cash method of accounting, and that is you're paid when you perform a service. Okay, that is the most common. Okay, um, I'm gonna just drop down here to the income portion, and I'm gonna just go through this. Any questions or anything, any specifics, then definitely give us a call and we can address it, because some of these things will definitely depend on the business you have to where you can utilize some of these things, expenses. So the income portion, you will put in your gross receipts, and that's the amount of money. Oh, and this is what I want to mention. If you have different businesses, you will have to do a Schedule C for each unlike business. So if all the business are like in kind, then you can use the one Schedule C. But if they're different businesses, say for instance, if you have a cleaning business and then you also have a what other kind of business? I guess do hair, barber, whatever. Any businesses are that are unlike, you have to fill out a separate Schedule C for each one. Okay, so that will be gross receipts. Okay, and this line here, line 5, will give you the gross profits of that. Okay. And this is going to be straight business. I'm not going to go into if you have inventory and things like that. That kind of gets you into a very in-depth conversation, because there's calculations and things that are embedded within inside of that. Okay. Um, Advertising, if you have to advertise, that's mostly common with a lot of different businesses, because you're trying to get your name out there and get the word out. Some advertisements may be paid, some advertisements may be free, but it all makes sure that you keep track of what those advertisements are. Car and truck expenses, this is the mileage. This is the mileage on your uh, for your business. That's going to be your biggest expense, if you will, or your business that you can recoup, part of the business that you can recoup, along with depreciation. We'll just tap on that just a little bit. If you're in real estate or what have you, line number 10. If you're in real estate or anything like that, you may, no, I'm sorry, let me take that back, because the real estate, if you are in real estate, that will pertain to income. Commissions and fees is if that's something that you pay out. Contract labor, if you have individuals, you may have a business that's going to require you to have some sort of help where you can't do it by yourself, and then you pay individuals to help you out. Keep in mind that if you pay out over $600, you should be issuing those individuals 1099 NECs. They in turn will need to pay taxes on their money as well. Okay. Um, okay, let's drop down to line 13. Line 13 in part two of expenses. What that will do is, sorry, the equipments or anything you have, your, say like computers, printers, any type of equipment that you use in the course of your business, they have a chart that will give you the life age or the lifespan that you can depreciate that item over. That's something you want to get with your tax preparer with as well, because you want to strategize on whether or not you want to span depreciation out over 5 years, or if you, or 7 years, ever, whatever the life of that equipment is, or if you want to go ahead and just do it all at one time. And you might want to do both. Sometimes in the first year, you may will get a loss on your business, and sometimes, you may get a income. But what you want to do and try to do is reduce your tax debt, reduce your tax liability. And you can take that depreciation of those items and do either bonus depreciation, or you can do your Section 179. So you would have to strategize and see what's going to be the best way for you to do that. Um, let's go to line 15, insurance. You may be, as a business, you may provide insurance for your contractors or people that work for you, or insurance for your business. Scratch that last portion. Provide insurance for you that covers your business in the event that someone may get hurt while performing business for you. Line 16 is on mortgages. You may have a mortgage on your business, not the business itself, but on the building to which your business is in. You have your legal and professional businesses. I am a member of Legal Shield, okay? And so you might have business insurance. Business insurance is something that you want to possibly have, and I'm gonna do a little pitch for Legal Shield, and I have it myself. And what that does is that anytime that you may go into a contract or something with someone, you may need a lawyer to look over your documents. Any type of transaction that you do with another business, or if you're trying to obtain certain things, you may want to have and should have a lawyer look over those documents. So of course you want to have some sort of legal type of coverage or legal type of service. Let's go to line 18, and I'm gonna skip around on this. These are probably, like I said, going to be your most common areas on the Schedule C. Your office expense, that's going to be your things that you do to maintain the office. You have office and supplies, okay? One of them, supplies, is going to be things that are redundant. You might have to continually buy papers, continually with your mailing and things like that. And so office expenses is going to be just the opposite. Those things that you use or equipment that you use in the course of getting your business going. let's see, line 20, okay? Some of us may have a building or something that we're renting or leasing from someone. So you'll want to insert or keep track of the amounts that you spend for that. Same thing with vehicles, machinery, equipment. You'll have repairs and maintenance that you might have to pay towards that equipment. Line 22 is supplies. So between line 22 and 18 is the office and supplies that I was speaking of earlier. You may have to pay, in some states, you may have to pay taxes and licenses for your businesses. Some businesses require you to have um, be licensed. So make sure that you check with your Secretary of State and make sure that the business that you want to go into, make sure whether or not a license is required. You definitely don't want to get caught doing a business to where you should have had a license to do. Travel and meals is a big one. Um, Meal deductions, your utilities, other expenses. These are some things that are on this Schedule C that you should have been keeping track of the whole course of the year. This is where all the money that you make, if you've made, we use the example of $1,000, you want to make sure that you might even break even. So once you go into this part two where it says expenses, then you might have spent $1,000 to keep your business going. So that means you broke even. If you spent $900, that means that you had $100 of profit, $100 of profit. So you get taxed on $100. Okay. So you might have spent $1,100, which means you have $100 loss. So it is very important to keep track of all of your expenses so that you can offset the income that you've made through the course of the year. Okay. These are some other items. You know, when you get a chance, just go out there, take a look at that Schedule C, see what all items on there applies to your business. Most of all businesses, we're going to line 32A. It's going to show you that all investment is at risk. Okay. Page 2 is that cost of goods sold. That's the area where some businesses, they maintain and keep inventory. Okay. Here's the portion for mileage. You definitely want to keep track of the mileage from the time that you place that vehicle in business is where you're going to start. So when it asks you, when did you place this vehicle in service for business purposes? If you just have the one vehicle, you need to keep track of your personal miles and your business miles. Your business miles are the only mileage that's going to go on this Schedule C. So make sure that you keep record of it. They have plenty of apps out there where they can keep track or help you keep track of your mileage if you don't do it pen and paper. Okay. Part 5 was talk about other expenses and other expenses that you have that won't apply or fill in the blocks above. Okay. All righty. So that's on the Schedule C. I definitely want to do this because we should be keeping track of everything, you know, everything in the course of the business, because let me get back over here. Let's see here. I'm sorry for the hesitation. I'm trying to get back to the let's see here. Your screen share is what? Ooh, I hope y'all got all of that. I'm gonna be upset. I'm gonna be upset. But again, you should have be keeping track of everything that your business has encountered. Um, keep good receipts. We also have a bookkeeping portion of our business as well, but you keep track of it. Keep track of it either monthly, quarterly, or whichever it fits good for you. Let me check my notes here, make sure I've gone over everything. Okay, I think I covered everything that I wanted to cover for today. Yeah, as far as mileage goes, the mileage that say for instance, most businesses, if you use your vehicle for your business, you're going to have actual and standard, standard deductions, if you will, or expenses. So if you have standard, the mileage rate for 2023 is 65.5 cents a mile. And that's round trip from your business destination, from your business to your destination, back to your business destination. That's a round trip of 65.5 cents per mile. So if you travel 20 miles to get to an appointment, a business appointment that is, then you're going to multiply that 65.5 times that 20 miles, and that's going to give you that amount that you can get credit for on that Schedule C. So keeping mileage is also important as well. For 2024, the upcoming tax year, it's going to be 67 cents a mile. So that's going to be the biggest portion that you can use to recoup. And a lot of us, since COVID has kind of slacked down, a lot of us will probably be using a lot of sales. I know your real estate, um, your service industries, electricians, plumbers, and individuals like that or businesses like that, they use their vehicles. So they definitely want to be able to recoup any mileage or anything that they use. Okay, I think that will do it for the year. Um, we at OneSource Financial Solutions, we thank all of our partners, our business clients. We thank everyone for their love and their support throughout the 2023 year. We pray and hope that 2024 will be even better. We hope that 2024 will be very prosperous. Those of you who are looking to set up a business, we hope and pray that you go ahead and do it. Um, we're all destined for greatness. We're all destined to be business owners. Whether or not we do it or not is another thing. But we're all destined for greatness. Um, we wish everyone happy holidays. Again, we will be on a limited schedule, but definitely if you have questions or anything that needs to be answered, feel free to give us a call. Our doors are open, our phones are open to answer any and all questions that we can. So thank you so much. Don't forget the BOIs that need to be filed come 1 January 2024. I guess that's it. We probably won't see you anymore until possibly the first of the year. If we do, we'll probably just shoot in and shoot out with a couple of suggestions, possibly reminders or what have you. Keep in mind your sole proprietors and limited partnerships to make sure that your records and documents are in order. If you're in need of a bookkeeper, then make sure that you reach out to someone to take your box of receipts or your folder of receipts. Just know that your tax preparer will more than likely charge you for that because they cannot prepare your taxes until they got a structured spreadsheet or some sort of structured form in order to work from. That Schedule C that I showed you that feeds into your 1040, they will need to populate those lines with some sort of information if you are to reduce the amount of taxes that you pay on the income that you've made. Okay, so keep all of that in mind. Again, God bless. Happy holidays, and we will see you soon. Take care, y'all, and bye bye.